Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, September 18th. We're looking at the last day and a half of the SPY ETS market profile here on Window Trader. Another interesting day. I made a horrific trade on my part, which cost me a lot of the last 3 weeks of what I was up. So very, very disappointing on my part. I'll go over that in a minute. As far as the market's concerned, now they have the SPY closing at 330.77. It definitely had a disconnect from ES. Last week's low was 331. It's hard for me to say we had an outside week down because of the dividend. So I'm just going to say we're in a 2-week balance. But it's definitely something to keep an eye on. We got to within 20-something cents of last month's low in the SPY. So because of the dividend, it's tough to say we had an outside week down or we. I know the ES is firmly back inside of the 7 or 8 day balance, but the fact that we stretched the balance so much, I'm calling the daily down and the weekly balance. Now, the market did a couple of things today I didn't expect, and the best way to explain what happened today is to go back to yesterday. So yesterday, if you recall, even though we were one-time framing up, I said if you were taking trades at the bottom of each time frame, you were doing well in longs, right? You didn't want to be buying at the top. And if you were taking shorts at the top of the time frame, you were doing well because we were coming back in. And it worked very well for me because I said at some point, if these buyers don't get what they want, they're going to give it up. And remember, that was a great trade on my part. Well, a very good trade. So today, kind of the opposite happened, right? For me, anyway. Now, the danger of this is at some point it might not go back in and get some really good movement. Now, here's the difference between yesterday's trade on the shorts and today's trade of what I did. We had the gap to lean on yesterday, and we had lower value. So keep that in mind when we go to what happened today. I'll give you the bad trade first. So today was kind of the opposite, right? We balanced inside yesterday. And by the way, this M trade is such an incredible trade. It's amazing, right? Now, I didn't take the short this morning. In fact, I'll go over those trades first, then the bad one. So I said, if we open here and get to around M's high, I would take the short to see, right? Because I have good risk reward there. If we take out M's high, I'm out. Well, we got just above the opening, and we basically had, today's opening is 335.37. The high is 49. We basically had an open test drive down, right? We opened, tested above it a little bit, and boom, drove straight down. But look what it did, right? If you took that short right away, and you had the POC, then you had the M's low, and then you had yesterday's low. It really is amazing. Now, I know ES is different than SPY today, but again, I trade SPY, and it's only a disconnect for a day or two, but this is how, look what you could have gotten on that trade. I did not take that trade. It came down fairly fast. I actually took a long. I bought the 334 calls against M's low, went down a little lower, added, but it did come back up, and it turned out to be a very nice trade. Then I took a long. I'm trying to think why I wrote this. I took a long in B also. I took the 333 calls, and I'm not sure exactly where I took them. I think I took the 333 calls. Oh, poor structure. I'm losing my mind. I can't even read my own writing. So when B period opened up, I was in 1-tick increments. It went down and left a lot of price points that weren't traded at. So I bought the 333 calls, and it went up, filled the structure. That was a nice trade. Okay. Now, C period, I took a short. We took out B's low, I took a short. We're now one-time framing down. We came out of balance. It worked out pretty nicely. From what I'm reading my notes. I took it off right around A's low because, remember, another reason I went long, by the way, in A period, and my room asked me, well, why would you go long here? The big reason was, because we're trading against short-term traders, the odds of them taking out yesterday's low right away usually aren't good. And I added decent size here and had a very good trade on that. So just to clarify why I added down there. C took out B's low, took a short, took out A's low, came back in, took the short off again, took a short in D because at the in D, when we first opened up, we had single prints. We took out C's low. So again, I had some pretty nice shorts on 335 puts that expired today. So the day was going well. E period. Took out D's low. Started going back up. I took a short, seeing if we were going to defend D's high. Well, it gave me a head fake. It did not. Took it out. I got out of the trade. And once I got out of it, it actually went back down. But that was a small loss. So here's where I got into a lot of trouble. F period got to within 2 cents of E's high. It was not a poor high, but it got to within 2 cents. It might have been a poor high in ES. I'm not sure. But the fact that the way it went up, now each low, right? So the way I was fading each high at the top of it because it came in, if you had faded each low, C's low, even though I shorted in C and D and made money. But if I said both sides could make money because even though C made a new low, came back, D, E. Well, I thought F was going to do the same thing. I'm like, well, we had a chance for single prints. We're 5 wide already. We're not getting a lot of acceleration, but that's the problem with these trades, especially when I didn't have the same thing. I didn't have a gap to lean on, and I didn't have lower value. That was for the shorts. For the longs, we were one-time framing. Well, we really weren't one-time framing down because E stopped it. That's another reason why I got long. But we did have value that was overlapping to lower. So that wasn't in my favor. So even though I could have made money on long C, D, E, and F, F, I decided to do it. Got long pretty. First time I did it, it was a decent trade. But then I got a little, it came in again. I got bigger. G open, went up. Didn't get back to where I went long again. G came down, and then I got very big. And boy, oh boy, was that a mistake. So all those times you can make money doing it small, well, I got large, and look what happened. And again, all this was week long. So everybody who was doing that same trade, fading the low and making money, well, this time on the fade, it didn't work. So they all got flushed out. I got flushed out. Shorts piled on. It was a tremendous loss that wiped out 3 weeks worth of. I made money 18 out of 23 days, and I wiped all out those gains and more. Absolute foolishness on my part, but more importantly, well, not more importantly, but the good thing is, if any silver lining is, my room understood it, and my room stayed out of it. And it's the money you keep, not the money you make. And that's the goal of the room. Okay, we called the market well, but execution, even though I'm doing this a long time, especially a silly trade like that, can really, really hurt. And then I did not do a trade the rest of the day. I just shut it down. My mental reserve was gone. It was out. But what I did tell, I certainly stayed in the room, and certainly gave guidance. I said, until we stop one-time framing down and get some two-sided trade, I would not look for a long. Now, SPY got to within 21 cents of last month's low and then never saw it again. So once you got two-sided trade here, now J did not take out I's high, came back down to its low. Now that is two-sided trade because now we have 3 times going here, but your risk reward's okay if you take a long here, you're out at H is low. But the better trade, and I told the room, is if you take out I's high, I think that you have good odds of filling at least this set of single prints and possibly getting the second. And that's what we did, right? So if you took a long on the break of I's high, you had a very nice long filling this set. And if you took the long again, you didn't fill them, but we almost got to it before M decided to rotate back down later in the time frame. So, good volume today. We're at, I think, 95 million with the after hours. The average is 72. No, we're at 101 million already. Wow. So the volume's very good today. The question is, was that volume done on the downside or more with the shorts covering here? To be honest with you, I'm not sure because this was not long-term sellers. Not a shot. They wouldn't have stopped 21 cents above last month's low. They wouldn't have taken all this back. So we have a double distribution day. So, all right. destinations for Monday, and they are far and wide apart. So you are going to get more volatility, more algos getting stretched as we get to certain destinations. So look at this. We closed at 330.65. First destination is the single prints, 331.58, get filled at 71. So your first destination is about $1 higher. Then our next destination, and again, this is until we get overnight highs and more market-generated information on Monday. But your next destination isn't until the day's high, 335.49. And above that, yesterday's high of 337.70 and filling the gap at 338.52. So that's far and wide apart. Well, if you think those are far and wide apart, wait till you hit a downside. Again, we close at 330.65. First downside destination is today's low, 327.97, which is now a weekly low. So that's what? 328. That's over $2.50 lower. And then below that, you don't have anything into those very, very important visual points. 327.86 daily low, 327.73 monthly low, filling the monthly gap at 327.23, and then 327.73, again, the monthly low, filling the weekly gap at 326.63 from August 3rd. And then below that, 326.13 price probe from July 31st, and then if we take out those gaps, 321.33 daily low. So the closer we get to the election and the wider these reference points and destinations are, boy oh boy, are we going to get volatility. And that's great if you take advantage of it, unlike what I did today. Now, let's go to the charts. So monthly, one time framing up, Bailey, right? Now, here's an interesting thing. Just like I said, we had a possibility of an outside week down, and I'm not calling it that because of the dividend. We have a possibility of an outside month down, right? Today's only the 18th. Now, I think the odds of going back up and taking out last month's high are a lot less than taking out last month's low. It could happen, but I think the odds are less likely. So if we do not hold last month's low, buyers are going to have to really, really watch out. The bulls could be in trouble if that happens. If we hold last month's low, or we take it out and come back in at least we'd be in balance. But right now we're one time framing up 5 months, right? 339.08 is the big one. Last February's high to get above. Now here's the weekly. Calling it a 2-week balance, but technically the whole range is this week. We took out last week's high. We closed below last week's low. But because of the dividend, I'm not going to say it's an outside week down, right? That's powerful stuff. I really don't want to call it that. What really frustrates me, though, is 2 days ago or whatever, I said, you know what? We took out last week's high. We have a good chance of taking out last week's low and having an outside week down. And instead, I get absolutely buried on a horrible long this afternoon. So balance in the weekly, up in the monthly, balance in the weekly, and daily I'm calling down because we're one time framing down for 2 days, because we're below the 50. Now, one day doesn't make a market, but the last day we closed below the 50-day moving average is April 23rd, almost 5 months ago. So you can't discount that, right? That's a little nuance that you can't discount, even though one day doesn't make a market. So what is very, very important to me on Monday? If we take out today's high and close above the 50 again, and even possibly take out Thursday's high and fill the gap, well, then all we did is we're firmly back in balance and we stretched it tremendously, and then the next goal is the top of the balance, which is 343.06, this week's high. On the flip side, if we cannot get above today's high and we take out today's low at any point, well then sure as heck that monthly and weekly gap are gone, and you heard those destinations I gave you, 321, 319 will be in the cards sooner rather than later. So it's going to be very important to see what happens on Monday. either today's low or today's high, right? Because we closed at 330.65. We're literally talking some big movements here eventually to the upside or to the downside. I think depending on which way we come out of Monday and close there. I hope you had a good week trading. Come check us out at CalumBackTrading.org. It really is a great education. I mean, the room itself had an excellent week. I was having an excellent week until I did something very, very silly. So I'm not going to let one trade define me, right? You have to move on. You're only as good as your last trade, right? So when you're up, there's no reason to get cocky. And when you're down, there's no reason to get very low, right? You learn from it, put it behind you, and start fresh on Monday. Have a great weekend, and we'll speak prior to the opening on Monday.